Hello everyone, welcome back to my YouTube channel. Today we are discussing the latest developments surrounding the Vietnamese Dong, the newest exchange rate update, and what these recent figures could mean for Vietnam's economy and currency outlook during the remainder of 2026. If you regularly follow international currencies, foreign exchange markets, and Vietnam's rapidly growing economy, then today's report will provide you with a comprehensive overview of the latest official information and the broader economic picture. As always, our goal is to separate verified facts from speculation by focusing on official data, professional economic analysis, and publicly available financial information. According to the latest update released on July 7, 2026, the State Bank of Vietnam has set the daily reference exchange rate at approximately 25,202 Vietnamese Dong per US dollar. Commercial banks across Vietnam continue to quote buying and selling rates around 26,072 to 26,462 Vietnamese Dong per US dollar, depending on the institution and transaction type. These figures reflect the ongoing operation of Vietnam's managed exchange rate system, under which the central bank provides a daily reference rate while allowing commercial banks to trade within an approved range. This framework has helped Vietnam maintain relative exchange rate stability despite significant changes in global financial markets over recent years. The latest figures indicate continuity in policy rather than any abrupt shift, reinforcing the State Bank of Vietnam's long-standing objective of supporting macroeconomic stability while allowing measured flexibility in response to market conditions. Vietnam's economy has continued to demonstrate resilience despite a challenging global environment characterized by fluctuating commodity prices, changing interest rate policies among major central banks, geopolitical uncertainty, and evolving international trade dynamics. Over the past several years, Vietnam has strengthened its position as one of Asia's fastest-growing manufacturing and export hubs. The country continues to attract substantial foreign direct investment as multinational corporations expand production facilities and diversify supply chains. Strong performance in electronics manufacturing, textiles, footwear, agricultural exports, and technology-related industries has supported economic growth while generating valuable foreign exchange earnings. These developments have contributed to confidence in Vietnam's long-term economic prospects and have helped support the stability of the Vietnamese Dong even as international currency markets experience periods of heightened volatility. Financial analysts continue to monitor the outlook for the USD VND exchange rate throughout 2026. Current projections suggest that the Vietnamese Dong may depreciate modestly by approximately 2.5 to 3% against the US dollar during the year. It is important to understand that these projections represent analytical forecasts based on current economic conditions rather than official policy decisions or guaranteed outcomes. Currency markets are influenced by a wide range of domestic and international factors, including inflation, productivity, interest rate differentials, trade balances, capital flows, investor confidence, and geopolitical developments. Even relatively small changes in these variables can influence exchange rate movements over time. Many economists also note that exchange rate adjustments often occur gradually rather than through sudden changes, particularly in economies where central banks actively manage currency fluctuations. Another closely watched factor during 2026 is the direction of the US dollar index, commonly referred to as the DXY. The US dollar has experienced periods of strength in recent years due to higher interest rates and global demand for safe haven assets. However, some analysts believe that as major central banks gradually adjust monetary policies and global financial conditions evolve, pressure on emerging market currencies could ease if the dollar weakens. A softer US dollar would generally reduce upward pressure on the USD VND exchange rate and could contribute to greater currency stability in Vietnam. Nevertheless, exchange rates are determined by multiple interconnected economic forces, and no single indicator should be viewed as the sole driver of future currency movements. Investors, therefore, continue monitoring developments across global financial markets, alongside domestic economic indicators released by Vietnamese authorities. Inflation remains another important consideration for policymakers. Maintaining price stability helps preserve consumer purchasing power, supports business confidence, and contributes to sustainable economic growth. The State Bank of Vietnam continues working alongside other government institutions to maintain a balanced economic environment while supporting long-term development objectives. Stable inflation can also contribute to greater confidence in the national currency by reducing uncertainty for businesses, households, and international investors. Alongside inflation, Vietnam's strong export performance continues to play a central role in supporting the economy. The country's manufacturing sector remains highly competitive, with products exported to markets throughout North America, Europe, and Asia. Growing participation in international trade agreements has further strengthened Vietnam's position within global supply chains. Foreign direct investment continues flowing into industrial parks, logistics infrastructure, renewable energy projects, and advanced manufacturing facilities, creating employment opportunities while expanding productive capacity. These long-term structural developments provide important support for Vietnam's overall economic outlook. At the same time, Vietnam's tourism industry continues recovering and expanding, generating additional foreign currency earnings that contribute positively to the country's balance of payments. Increased international travel, improved transportation infrastructure, and continued investment in hospitality services have strengthened another important pillar of economic activity. Combined with export growth and foreign investment, these factors help diversify sources of foreign exchange earnings and reinforce macroeconomic resilience. Despite these positive developments, questions regarding a possible revaluation of the Vietnamese Dong continue to appear across social media platforms, online forums, and various unofficial financial discussions. It is important for viewers to understand that exchange rate speculation frequently accompanies periods of economic change. However, there has been no official announcement from the State Bank of Vietnam, indicating that a formal currency revaluation has been approved or scheduled. The central bank continues to emphasize orderly market operations, financial stability, and prudent monetary management. As a result, market participants should distinguish carefully between verified policy announcements and unsupported speculation. Responsible financial analysis requires relying on official statements, published economic data, and credible institutional research rather than unverified claims circulating online. Looking ahead, economists expect financial markets to remain attentive to developments involving U.S. monetary policy, global inflation trends, international trade activity, commodity prices, and economic growth across major economies. Each of these variables can influence investor sentiment and currency markets over time. Vietnam's policymakers are also expected to continue monitoring domestic economic performance closely while maintaining flexibility to respond to changing conditions if necessary. Their primary objective remains preserving financial stability, supporting sustainable economic growth, maintaining confidence in the banking system, and ensuring orderly functioning of the foreign exchange market. These objectives typically encourage gradual policy adjustments rather than abrupt changes. For investors, businesses, and individuals, following developments in the Vietnamese Dong, the most valuable approach remains staying informed through official announcements and reputable economic analysis. Exchange rates naturally fluctuate as economic conditions evolve, and forecasts should always be interpreted within the context of changing market circumstances. While analysts continue discussing possible scenarios for the USD VND exchange rate throughout 2026, future outcomes will ultimately depend on a combination of domestic economic performance, global financial conditions, investor confidence, and policy decisions made by relevant authorities. The latest official exchange rate update reflects continuity and careful management rather than dramatic policy change, illustrating Vietnam's commitment to maintaining stability in an increasingly complex international economic environment. As additional economic data become available in the coming weeks and months, market participants will continue evaluating inflation figures, export performance, industrial production, foreign investment inflows, tourism recovery, and international monetary policy developments for further insight into the future direction of Vietnam's economy and its currency. Thank you for watching today's comprehensive update. If you found this analysis informative and helpful, be sure to subscribe to the channel, like this video, and enable notifications so you never miss our latest coverage of the Vietnamese Dong, international currency markets, global economic trends, and official financial updates. As always, this report is intended solely for informational and educational purposes and should not be interpreted as financial, investment, or trading advice.